The constant technological advancements have shifted the paradigms of conducting business among the Indian population as people are more focused towards opting for technological driven alternatives for making their business operations, financial requirements, and overall lifestyle easier. And the banking sector is not an exception to the same. The innovations like embedded finance, payment gateways, crypto exchange, among others, have completely changed financial services where the customers have a choice between fintech and banks, bringing traditional banks into a tough spot. Hello everyone, I am Shubhangi Jain and today I shall discuss about the various aspects of fintech versus banks and how they are changing the face of financial services to help customers choose accordingly. So let's get started with the video. Firstly, let's understand the difference in terms of meaning of fintech versus banks. The term fintech is formed through a combination of two words, financial and technology. Therefore, the term fintech can be briefly introduced as a technology driven financial service which aims towards the automation and improvement in the use and delivery of financial services in the financial sector. Banks, on the other hand, are the traditional financial institution possessing the license to accept deposits and give loans, including other financial services such as safe deposit lockers, wealth management, and currency exchange. What are the challenges faced by the banks in the tiff between fintech versus banks? The challenges faced by traditional banks after the introduction of fintech that led to a fall in their demand are: first, monotonous business model. The business model of the traditional banks is quite monotonous as it requires the customers to be physically present to deposit the money required for loans, and some banks still opt for manually verifying the identity of the customers during onboarding process despite the introduction of KYC services, whereas the fintechs operate virtually, making it a challenge for the traditional banks among fintechs. Second, regulatory requirements. The banks used to have an edge over the fintech due to them being highly regulated by the appropriate authorities. However, the scenario has drastically changed post the pandemic and most people are now bound to work remotely owing to the safety measures which have encouraged people to shift towards digital banking due to fewer formation and complexities involved in the same, catering to the growth of the fintech industry. Third, growth potential. The factors discussed above and some other factors have led to increased growth potential in the fintech sector as the overall fintech market opportunities in India is established to be 1.3 trillion by 2025, making the growth potential of fintechs to be much higher than banks, which can be a threat to them looking at the statistics mentioned herewith. How is fintech changing the face of financial services? In the dilemma between fintech versus bank, fintech is changing the face of financial services in the following ways. First, asset management. Fintechs have aided in asset management through innovations like robotics, which use technology to provide low cost investment advice and services, resulting in the rendering of their services at a lesser cost than the traditional banks. Additionally, fintech is using new technology to provide innovative investment products. Second, easier access to financial services. The alternative financial services provided by the fintechs act as an added advantage for the customers by making access to the financial services a lot easier than the traditional banks. This is especially beneficial for the undeserved population who don't have access to traditional banking services and products that are now made available with the help of fintechs without the hassle of visiting the banks. Third, affordable financial services. Along with making financial services more accessible, Fintechs have also facilitated in making these services more affordable for the customers as well by offering financial products and services at a lesser cost than that of the traditional banks. This can be a lucrative option for the customers attempting to save money, making it a significant change in the financial landscape. Fourth, competitiveness within the financial sector. The innovative financial products and services provided by the fintechs have led to an increase in the financial sector that can be quite beneficial for the customers as it can result in a reduction of the prices of such products and services along with an increase in the choices available to them. Fifth, transformation in the interaction among financial institutions. The convenient and user-friendly solutions offered by the fintechs have drastically transformed the manner of the interaction of the customers with the banks, making it more simplified than ever. Recent trends like mobile banking and embedded finance in the fintechs have helped customers manage their finances effortlessly and efficiently. Sixth, improvement in the operations of the financial institution. Financial institutions have started approaching the fintech solution for improving their operations and maintaining healthy competition in the financial market, which includes the adoption of new technologies and restricting the business models which can significantly impact the overall operations of the financial institutions. Seventh, enhanced transparency and trust in financial services. There were times when the banks were considered opaque and untrustworthy, but the introduction of fintech has led to a shift in this mindset. The reason for such a shift is the transparency tools provided by the fintech, which allows the customers to track their money and the manner in which the technology is being used. In addition to this, fintechs are more responsive to the customer needs as compared to the traditional banks. 8. Provides better ways of utilizing financial services and products. The fintech empowers customers to make better decisions regarding their financial products by providing them with better ways of saving, investing, and making payments, along with better tools for managing their funds, leading to more financially aware and empowered customers. 9. New market opportunities for the financial service providers. Fintech provides new market opportunities by introducing new ways for people regarding capital access, which leads to the creation of new opportunities for lenders and investors, making it easy for people to start and operate businesses and open up new markets for the providers of financial services. 10th, driving innovation in the financial sector. The fintech industry is driving the financial sector by constantly looking for better ways to enhance financial products, pushing the entire industry to move forward and find ways to stay in the market, which can help in the overall growth of the financial market and the financial sector. In conclusion, the fintech sector of India continues to experience tremendous growth opportunities. One of the driving factors in the same could be the digitalization and disruption of allied ecosystem and the emergence of the new wave of technology. This sector has always positively impacted the financial inclusion. There is an excellent opportunity for the fintech players to drive innovations, better partnerships, and transformations for inclusive and substantive economic growth, making it a better option than the traditional banks of the country, which can help to clear the confusion of choice between fintechs versus banks. This brings us to the end of the video. I hope that you found it insightful. Kindly subscribe to the channel for more such content, and in case of any query, contact Enterslice.